I have started thinking about it more.
We're starting.
I've been thinking about it more as far as how am I living my life? How would I make these decisions myself? And just watching other players that their passive income is just jumping so high real quick. I'm like, how are they doing that? And it's by they're taking I'm always looking at my cash on hand and going for the small opportunities because I figure that's how I would have to run it in my life. I can't just go out and buy a house and be like,
Mm-hmm.
I don't even have my own house. So I'm not going to go just buy a house to rent it out. Where these other people that are jumping real high in their passive income are doing it by taking the larger opportunities, even if it looks like you don't have the money to do it, and just taking out the loan to make it happen. And it's just kind of, I don't know how to describe it, but my way didn't seem to be
Getting it
working.
out. Yeah, and it's interesting because when he talks about in the book, the Rich Dad Poor Dad book, that bankers and people who are accountants and bankers and don't they take forever to get out of the game because their mindset is set into a way of not being rich. He's like you go to your banker's not rich. He's like, this is not the mindset of I think he says in there, if knowledge made you rich, then every librarian would be rich, right? Because they're just sitting there all day long with all the knowledge in the world, but you got to apply
Right.
it. And the point being is, so during that reminds me, just because you brought that subject up, and that's kind of what you're supposed to do with the game. That's the whole purpose of the game, is to change your mindset and say, maybe what I'm doing is not the right way to get there, and it's not necessarily right or wrong. It's just not getting me there as fast as other people or as fast as I want to go. Good. What's up, Crystal? You're not.
Yeah. So, uh, when you're saying that, and I thank you for your like feedback, William. But I mean, and so this is my thought, like, because I was thinking about our class last week, and just trying to wrap my mind around uh asset creation so that I can pay off some of those liabilities. You're saying that like the debt part is like completely unavoidable on
Mhm.
some level.
Mhm. Well, there's two different types of debt, right? There's good debt and there's bad debt. All right. Um, Most people don't know about good debt. They only hear about bad debt because that's what most people have: credit card debt, a mortgage, a car loan, all those things that are liabilities, right? But William, when you bought a house, or when you buy a house in the game as income, does it go on the asset side or the liability side?
It goes on the asset side, and
Mm-hmm.
that was one thing I think it oversimplified the uh, the investment in real estate, because it's under the extreme positive circumstances in the game is my reflection of it. That if you buy a house and you just guarantee that you're going to have a renter in it, and that renter is paying such and such amount over your mortgage for that house,
Right.
then that's great. But it doesn't take into account for the uh, if you don't have the money to save, if you go 2 months without a renter and you have to pay that mortgage. I own 5 properties. If I, what I mean, in
All
that.
right. Well, okay. So let's talk. Let's think about that. So, and that's your pushback, right? You're like, okay, well, what about this? What about that? And what if this happens? So instead of looking at it in that way, because you would agree that there are people like the wealthiest people in America own real estate. All right.
Yes.
So saying, okay, and this is actually much more advanced and down the line, but it's like saying, okay, well, what if I don't have a renter for this amount of time, or what if this is a problem? There's people who won't go into real estate because they're like, I don't want to be a landlord and have to go fix someone's toilet at 4 a.m. in the morning, you know? And I remember I was speaking to a friend of mine in Florida, and she was like, I don't want to have to kick somebody out of the house because they don't pay their rent. Like, I don't want to be that kind of person, right? So these are all your psychological blocks, because you know that people do it and they get around the things that you're saying. So now the question has to be, okay, here's why I feel, here's what I don't like about it. How is that problem solved by other people?
Right. Well, and see, that's the point I'm making, is that the rich people that are into real estate, what point in their life are they, and what mitigations, what things, like right now, like if I in the game,
Mm-hmm.
it's like, oh, you just take out, $20,000 loan, you buy this house, and you're going to make $1,000 a month off this house. But for one, could I get that kind of loan? Can I? And if I don't have these people that haven't invested in real estate, they have the fallback. Like I don't have 6 months worth of bills, and that's the thing, is that if I
Mm-hmm.
bought a house, I would have to or add that liability, that mortgage payment towards my um 6 months. You know what
Yeah.
I mean? Because I need to have 6 months worth of that house's mortgage, even if it's getting paid. I can use the money I'm making off of them to help build that 6 months. But until I have that 6 months, I mean, it doesn't seem wise to just go out and buy a house.
Well, let's talk. Well, it's okay. So you're two things. Number one, you're applying the game to your circumstance right as it is right now, and the game is really designed to just open your mind up to how to do it. Now, just and to get your mind going, okay, like I'm looking at this card and it says I'm getting $100 cash flow. Like it took me even a while. I'm like, how am I getting $250 cash flow? What does that mean? I got this mortgage, I got this extra stuff I got to do, but it still says positive 200 or negative. Sometimes they're negative. I don't know if you've seen that card, right?
I have, yeah.
And it's like, well, do I want to buy this house and have negative cash flow? So the point of it is, for the game, is you just say, okay, that's where I need to go. At least I understand where I need to get to. So if you're saying in your own life, hey, I want to get these other things done first, or I want to have 6 months of expense, it's like, okay, well, either A, sure, that's fine, you can do that. B, you could say, okay, I'm gonna do the get 6 months first, and then I'm gonna do it. You could say, I'm just gonna do it right now and screw the 6 months. Or you could say, well, how can I do both? You could do one, or you can do any of those three. And there's nothing wrong. It's just whatever speed you want to go at. So I would highly recommend like this particular book, which is one of the ones that on the website, and it's by this guy Robert G. Allen. And basically, the book is about well, you see, it's all about retiring 10 years using and he's got this thing called Nothing Down. And basically, he was talking all this smack on the radio. He had a radio show saying that he could buy real estate in any market. He's like, it doesn't matter. Like, I don't need money to do this. And there was another radio show that took him up on it. And so, or it wasn't a radio show; it was a newspaper. This was years ago. I mean, but he was in like the middle of the country, and he already had another book before this. And the newspaper said, let's hold him accountable to this. We're going to give him $100. We're going to give him a week. And we're going to have one of our reporters follow him around all week long. And they said, we're going to put you in San Francisco, which is like one of the hardest markets to buy houses. And let's see. Oh, no, it wasn't. I don't think it was a month that he had. And he got $100 a week or something along those lines. I forget. You have to read the book. And at the end of the month, the guy's like, the reporter calls the editor and he's like, well, how'd it go? And he's like, well, he didn't buy a house. Actually, no, it was a week. It was a week. He's like, he didn't buy a house. And the guy was like, yeah, I knew he wasn't going to be able to do it. And he's full of crap. He's like, well, he bought 3 houses and he just gave me $55 back of the 100 that we gave him. So, and he talks about how he did it, what he does, and these techniques. Now, it's not easy. right? It's a process like anything else of learning, but is that something you want to learn how to do? And do you want to go that route with real estate? So, or you could do it with, there's multiple ways you can do it, right? It's just real estate is one of the easier ones, and then you flip it over and then you go to bigger deals, and then you could start doing like, businesses and all that kind of stuff. That's in the larger deal thing. But what he's basically getting at in the game is that you could start doing these smaller deals. He talks about Monopoly. He's like, Monopoly teaches you how to become rich. He's like, it's 4 greenhouses and then you roll them over into a hotel. He's like, and that's what you do. You just do small, like in his thing here, he's like, in 10 years, like basically what I did is I said, I'm going to buy 2 houses a year for 10 years straight. And then after 10 years go by, I'm going to sell off half of them, because after I'll have, actually, no, it was 2 houses a year for, yeah, well, I guess it was for 10 years. And he's like, and then at the end of the 10 years, I'll sell off half of them, pay off the mortgages for the other half, and then live off the passive income of those 10 houses.
Right, and that's the thing that, so like right now, I had my wife sitting here when I was doing the budget worksheet, and I just can't get her on board. I'm gonna have to just be like, I'm just doing it. I don't care what you say, I'm doing it. This is what I'm doing, and you just get over it. But the like the 10% to investments, that's X amount of dollars, and it's a good chunk for us,
Right.
And I'm like, yeah, I need to be investing this every month. And she was like, well, what are you going to invest it in? I'm like, I don't know. I got to figure that out. That's the thing, is because she looks at all my investments I've made. And even though everything I've invested in, I've sold for a profit, or I'm holding on for a bigger profit. She's just like, it's like gambling. And I know you got a gambling addiction, and you're just gambling our money away. And I'm like, look, I was like, all I can tell you is right now, if we continue life on, I retire in 6 years. If we continue doing what we're doing for 6 years, we're going to be in the same position we are now in 6 years. Because like we need to make different moves. So I got to look at, so the game has opened me up to things I should be doing. I just don't know
How to do them.
So let's say my budget, I don't want to get y'all in how much money I make or whatever, but say it's $800 a month I'm supposed to be investing.
Right.
So what do I invest that in to where, because like with the game, when you buy a stock, so say I just invested $800 every month into AMC, that in the game doesn't get you closer to getting out of the rat race.
No,
until you sell it.
Right. Because it's a trade. The difference between a trade and and passive cash flow and an investment. It's like the difference between flipping a house and renting a house. But let me, because I don't want you to go too far down the line, and I see Crystal has her hand raised. What I will tell you is part of the investing part of it investing doesn't necessarily mean you're taking the money and you're actually doing anything with it. Like in my portfolio, you want to keep at least 30% in cash. So it doesn't necessarily mean that money needs to be actively being invested at the end of each month. It's just, you just know that let's just say 800, because you threw that number out, that 800 is never going anywhere. It's never being spent on anything other than making me more money. So even if it's sitting in the bank, like until it's time for you to make an investment, so you're like, well, hey, I don't have the down payment for a house. Great. So then let's say you wanted to do real estate, and that 800 is there. And so after 10 months, you got $8,000. Gotcha. And maybe that's enough to put down for the real estate investment. Does that make sense?
Right. And I think that's basically the game. It's got me in the right mindset, but the problem is the game goes so fast that you don't realize how much time's going on, how much time is passing. So you're just like, okay, I should be buying a house tomorrow, so I can make some fucking money now. And that's not, life.
Yeah,
that's not how it works.
Right.
All right, Christelle.
I was like, I did it in 3 turns. I bought 4 houses. Why can't I do one in 3 months?
Right. Gotcha. Go
Uh,
ahead. What do you have?
yeah, I really like your, I was just kind of guess I was making a comment on what you were saying, William, about, uh, shifting your mindset and also, yes, the difference of like I noticed like even as you're shifting your mindset when you're thinking of like, you know, getting more assets and putting money away, how there's all these stoppages of like, wait a minute, can I actually afford to do that? Even though you know this is the right way to do it. But I also like, so I'm by myself, you know, I got no cat, no kids, no dog, nothing of that, no man, none of that. I know that I can kind of control my finances on my own, but like, I guess how, like, do you need like I mean, it's good that you're part of this where you have a group of like-minded individuals that
Mhm.
are kind of like on the same path that you can kind of like bounce ideas off of. Do you find that it's kind of difficult a little bit when you're, you know, especially, you know, as like you have a partner that maybe is not taking the class, but maybe doesn't get it because it may seem like this goal is like so far-fetched and it's not going to work. Like, how do you balance that, like for
The
for
only, well, you
yourself?
have to have a conversation, like William said, in that what you're doing, and then the other thing is you don't want to say things like, "Yeah, I'm taking 800, I'm taking all of our money and putting it into AMC." Like that's not a good, that's not a good strategy. You know, even if that money stays in I would take a baby step with somebody who doesn't understand these concepts, and I would say, "Look, this is our my goal with this 10% is for us to eventually get it to a point where it's paying, where our investments can pay all of our bills. That's our goal. So this 800 is not going into a savings account. It's going into a separate account that we're going to use, and we can make a decision together on what's the best way to invest it. And then we'll talk, and then you can have a conversation with your partner about like, okay, we've got this much in the investment account. Don't even call it a savings account. Like there's a savings account, that's one thing, but the investment account is another thing. And let's talk about this investment. Let's talk about potentially doing this. And that conversation is remember, this is all, the whole goal of this whole thing is to just give you the starting point, you know? So I think I remember Neil deGrasse Tyson said this. He's like, when you talk to little kids about like astrology or astronomy and become like, they're into the stars, they're into space already. You don't gotta get them into it. Okay, like they're already into it. So it's then, so but when you try to teach them math, that's when they're like, ugh, I don't want to do this. But if they're so excited about space that they now want to learn math, then they take that and they say, I want to learn this stuff because I want to know what the heck I'm actually looking at. So you get them excited about, so that's the same thing that this is. It's like, okay, well, how can I, all right, so like Bill's asking the right questions. It's like, okay, well, I
Yeah.
know what I'm supposed to be doing, but how do I get there? And there's more education that's definitely needed, you know, past this
Yeah,
beginner class.
that's definitely how my brain works.
Yeah.
Right. So I'm gonna like I've been thinking about it all morning that I'm gonna looking at more safe and like CDs or whatever, and using my investment in those instead of having just sitting a checking account until I'm ready to do something. Find out what kind of like CDs I can, you know, invest $800 into every month, and then
Right.
put it into that CD, and then knowing that in 6 years when I retire, that's when I'm going to try to make big moves with my
I would look
with
into
whatever
a
that
money
CD is.
market account versus a CD. So, all right. So they say the luck is the intersection um, of preparation and opportunity, right? And at that
Right.
intersection is where you get lucky, right? So you want to have, so what you're doing with your investment money is you are doing the preparation part, right? It's like I want to be, so like let's say something dropped in you hear someone passed away and they're trying to get rid of the house, and the kids are like, oh, we're just going to sell the house because all three of us are not going to live in the house and blah blah blah, and you hear some kind of opportunity. Now it's like, okay, the opportunity comes and now you are prepared to have it. So now you were lucky. But if you heard about that opportunity, you didn't have the money put aside or anything ready to go, or it's locked up and like I can't get it,
Right.
well then you're not going to be lucky, if that makes sense.
Yeah.
Right. So that's the thing is I gotta look at
Yeah. Look into money market accounts.
That's the ones where they'll at the beginning they stick it into higher risk stocks
Well, it's just
and
a little, money market accounts usually will pay just a little bit, they'll pay better than a savings account because they're using the money for their own things. But
right.
but again,
That's what I heard. There's also ones that you can money target accounts, where you say I'm going to invest this amount, either just one-time investment or over this amount a month, and at the end of 6 years I want to be at this amount of money, and then that whatever company that you're investing into, that you're letting them use your money to invest, it's their job to basically run your portfolio in that aspect until, so that at the end of say 6 years that you reach that goal of the amount of money that you asked them to reach.
Well, remember also in last week's class, we talked about this one here, number 3, protection and asking for qualified help. So once you're getting to this point, now you don't have to hire these people, but you might go and talk. So now that you have a mission, you have a goal, you have your dreams, you have your goal, and now you know what you want to do and how soon you want to get there if you worked out your goals. Now you can go to a financial planner or a financial advisor and say, here's what I want to do. What's the best way to do it? You're the expert. Tell me what to do. You don't have to figure it all out. But if you go to a financial advisor and just say, well, that's what they're always going to ask you right off the bat. Like, what are your goals? And you're like, I don't know, I'll make money. I need to have money. I want to retire. So
be rich.
Right.
Make it happen.
Yes, that's a healthy goal.
Right.
Just
And
be
that
rich. That's my goal.
And that investment money could go to these things as well, by the way, because this is it's not an expense. It's an investment into your education. That's also something, by you knowing more, is definitely an investment into you making more money.
Right.
Like people just spend $400 on a class or something like along those lines. It's not, that's part of your investment. It's considered, you would see it as an expense, but it's not if it's making you more money in the long run. Christelle, see your hand again. Or no?
No, it's supposed to be there, but
Okay. So
just throw me off because it's not brown. But like, I just wanted to say, like, how do you know? Okay, so I went to a financial advisor. That was kind of like what was the company again? It was like one of those Primerica.
Oh.
But it wasn't Primerica. It was a different Primerica, basically. And so, are they qualified financial advisors?
You can ask them, was the series, do they have their series? Most likely, yes, they have to have their Series 7 license and whatnot. But understand, when you're dealing with financial advisors, they are selling you something. They're selling you stuff.
Right.
So, and it doesn't cost you anything to listen, but you can listen to them, and then you just don't have to, you shouldn't sit down with the first lawyer and be like, okay, you're my lawyer. Go to your first accountant and be like, you're my accountant now. You want to sit down with 2 or 3 of them, hear what they have to say, and figure it out, and I'm one of the things that I say when I do solar, I go, hey, look, because they're always comparing me to another company. I'm like, well, hey, look, who's going to tell you more about what you're missing from the other company than me? So you might as well send me their quote, because I'll at least tell you what you can ask them, because I'm trying to get your business too. And you could do the same for my quote to them. But we're the best people to ask, because we're going to tell you exactly what's in there, and we know better than you do. You don't even know what not to ask.
And a financial advisor will help you invest your money, as opposed to a CPA will help you structure your money.
Well, CPA is an accountant. They're going to help you file your taxes and make sure everything is they're going to help make sure that you're not breaking any laws and you're doing all the right things, and you're going to maximize your taxes. So taxes are your number one expense, right? That's what a CPA does. A financial advisor is going to tell you what to do with your money as far as, you know, getting the results that you want and getting a return on your, but they're not going to give you a return. A financial advisor is never going to tell you, hey, go out and buy some real estate and you know, get passive income from
I
it.
see.
That's what they
I
do.
see.
They're going to sell you their financial products
Very good.
that they make
Thank
a commission on. All right, so it was good. I was a good discussion. I'm enjoying this discussion. So, but I want to dive into at least doing these worksheets so I can go through and explain them all. I see Spirit is in there. Good. All right. So when you do yours, you can then just take it and drag it into your folder because your folder is good to go.
Yeah, I have it on open on my iPad, so
That's fine. Yeah. And what I'm going to do with these worksheets, I just put them all on one thing, but I'm going to, like you were saying, there's tabs on the bottom. I'm just going to separate them all apart. So then you can just copy them and work on them yourself. So we're going to start with the one that's the
Oh, okay. I didn't do it right.
most
Okay.
important, is your budget. Can you guys all see this?
Yeah, I can.
All right. So as far as the budget goes, this budget is set up just like the cash flow game. It's designed to mesh basically on that same process. Whereas you have your income, all right? So however income you want to do. Thinking of you, Bill, this might be something you might want to do with that money is look into just putting into a dividend stock, because a dividend stock. What?
I have looked into that.
Yeah. So I have a couple of dividend stocks I really like, but you know that dividend is going to give you probably more than what it would be doing in a whatchamacallit,
CD or
well, you
IRA.
get it right away, or it's not as risky. You know, it's like Walgreens is my number one dividend stock.
What's your percent dividend on that?
I don't know.
Do you know how often they pay you? Is it monthly,
It's
quarterly?
definitely quarterly.
I found a monthly one. It's like $16 a share, and it averages like a cent per share a month
Yeah.
dividend.
Yeah. So the point being is it's just there. It's making you a little bit of money. It's safe, and you know, and then you can get it out if you see something bigger. Like in the game, one of the things that that I do to win the game almost immediately is I just wait to get I try to get the stock, the Mighty for You stock, either at $1 or $5, and then I just take out a massive bank loan, and then I sit on it until it comes back at like 30 or 40, and then I have enough money to do all the deals that I want later on, which is kind of what I'm doing right now in real life with AMC.
Right.
So
you think you're like basically you have more than one vehicle, well, one wheel turning at the same time. Like you have some of your money's like split up, working on a long-term growth strategy. Then you have some of your shorter. Is that?
yes, think of it as different vehicles. So like if you're taking a trip, to New York, are you flying or are you driving?
I'm flying.
Okay. So you're not just taking a plane, right? Because you got to get to the airport, right? So you're going to start off with a car to get to the airport, I'm assuming, right? Or you're not walking to the airport, I'm assuming, right?
Oh yeah, I'm taking Uber.
Right. So you got to take, so there's different stages of the trip. All right. So you're going to go faster in the plane, but you got to be in the car first to get to the plane. And then when the plane lands, you got to have another path. You got to have another plan. Like, how am I going to get from the airport to where I'm going to my destination after that? So there's different vehicles that do different things. Like, you know, in the book, he talked in Rich Dad Poor Dad, he talks about like taking a trip to California. He's like, well, maybe you want to, people would say, well, I take a plane, and then the things I just said, but it's like, but maybe you want to see the countryside, maybe, and you want to go slower, and you want to do a camper and go across like that, or visit people on the way. So there's different vehicles for each person, depending on your financial goals and depending on how fast you want to get to where you're going. So that's why this whole process starts with your dreams and your goals. That's the most important thing, because if you don't, like, if you, like I have on in my goals, like I want to buy the house in 5 years, right? So there's a difference. I have to use different financial vehicles to have the money to buy the house in 5 years than if I said I want to buy it in 10 years or 20 years.
Correct.
You know, so that's why it's like when people ask the question, oh, I got $5,000, what should I do with it? I don't know. How am I supposed to know?
Yeah, if you don't
I
really
don't
know where
what
your goals are, where you want to, yeah, okay,
Yes,
okay.
yes. Very good, very good.
All right. So, all right. So we got any kind of income. You have your quarterly and your monthly. Quarterly is every 3 months. Monthly is your monthly. Most of the time you'll do monthly. I only have quarterly in here actually because of the dividend. Some people will do that. Most other incomes are all monthly. And even if you have your weekly paycheck from a job 1, job 2, job 3, whatever, you break it down into monthly. So everything.
Question, so
Good.
with the job part, so my job is hourly plus commission or base plus commission. And so like I can split that into like the same, like one is going to be consistent and I can predict that. And then then my commission, I can just import that into it like as I go on, correct?
Yes.
That's what I did. That's how I broke it down on the sheet.
Right. So like I'm a commission person too, but you saw like I have a base pay of 560. So you notice I just put in 560 all across. And but that's obviously not all the money I'm going to make, but I don't know from week to week what my paycheck's going to be. So I put in what I definitely know. And then the actual, when it actually happens, then I can change the actual. All right. And then you'll have the actuals on the end here. All right.
Yes.
So if you just have no, like, hey, because the same thing with like maybe asset 1, asset 2, that some of these might be dividend, like a dividend stock. I don't know how much they're going to pay me from quarter to quarter. I'm going to try to guess. And same thing with other income, if you're doing any kind of sales type of work. So you want to guesstimate it as at the low end. And then when the actual comes in, you have the funnel going in, right? All right.
Got
So
it.
then, so you're going to start off doing your, now, by the way, also, if you ever want to add, like if you have like 6 jobs, if you're Jamaican and you need to add one in here, just insert one above, right? So insert in here, don't go to the very last one and insert from the bottom. And again, I'm just doing this for the video to explain, or insert from the top because the equations will adjust if you're like somewhere in the middle, right? Then you have your expenses. All right, so now I have 2 colors on here. I'm going to explain this in a minute, but so your expenses could be everything that you have to pay on a monthly basis, and then that's your total expenses. And then I have your liabilities down here. So an expense, maybe I should call this, yeah, you know what? That's what I'm going to do. So these are your expenditures. And then these are your total expenses.
What are expenditures? Or I know you're going to explain, maybe you shouldn't.
Nope, expenditures are like things that you have to pay. You're gonna have to pay them every month. They're never gonna, they don't have a balance. Okay, so like Netflix or the gym or your car insurance or health insurance. I should put that in here too. If you don't have health insurance through your company, right? So, which I don't. So anything that you're paying and there's no way to get rid of it, food, your cell phone, like you can't just pay it off. All right. So liabilities are things that you could eventually pay off, or that's down here. Right. And then your total expenses is your liabilities minus your plus your expenditures.
Got it. So rent, expenditures, and then, yeah.
Yeah, so rent would be an expenditure, a mortgage would be an liability.
I see. I just
Oh,
I put my mortgage as my, but yeah, I get it. That makes sense.
Right? Because you
I
hit
rent.
the
I live
lottery
on
tomorrow, you
post.
can go pay off your mortgage and you won't have a mortgage payment anymore.
Right. Will you accept me on this?
Oh, sorry. Yeah.
That's all right.
Didn't see it. All right, so we're good at, everyone's good on what expenditures versus liabilities?
Yeah.
Okay. So as you put these things in here, you pay $200 a month for this, and
No
you know,
comment.
$400 a month for food or whatever it is you got on 25 for the phone, gas, let's say $100, that's it more, right? So
So if your utilities are combined with your rent,
then I would just make it your rent. All right, if you don't pay them. Anything that you actually pay. And again, this is not like a
I get
rigid, you have to do it this way and this way only. This is a framework for you to be
Understood.
able to use, right?
Understood.
So
$10.
oh, there you go. No deal check again. All right. 250.
Oh, okay. I get it. 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 So like if you have car payments, eventually you won't be paying down your car,
Right.
but you'll still have your insurance.
So car insurance is up here.
That's your,
There's another question
you
I
can't
had
get
about
rid of that, but okay.
Yeah. What's the question? Well,
so when you put in your income at the top, are
mhm.
you already subtracting taxes? Because
Yes.
okay, see, I did not do that, so I added taxes to my expenditures.
So let's put it this way. It's easier to do it without doing it because you have the taxes coming out, and then you can when you get your taxes back, if you're overpaying, you can just have that as other income. Like, hey, I'm expecting $5,000 back from taxes.
Gotcha.
You know what I'm saying? Whatever makes it easier for you. If you don't, if you want to really dive into the weeds and spend more time separating all that stuff out, then you're more than welcome to, but you don't have to.
Well, I don't know if anyone's familiar with the military LES, how
I'm not.
it shows you, I'll send you one, but it shows you what you made that month. Then it shows you all your deductions. So where all those deductions went to, like
Right.
To dental, to
You're right. Yeah. Like I don't count in this like my 401k plan or my, like you said, dental, vision. When I don't have the insurance anymore, but when I used to, I would just say, here's the money that I'm managing that I'm getting into my hands.
right.
And then the other stuff is the other stuff.
Gotcha.
Now, again, but if you want to go to that granularity, you're more than welcome to do that. You would just then put, like you said, I put my taxes down here, I'll put my health insurance, vision, then you just make those expenses and do it. I just don't feel like you really need to do it unless you want to.
That's fair.
Hey, you removed the liability part?
It's right down here.
Never mind. Never mind.
You're all good? Yeah.
How do you calculate your taxes?
That's why I don't put taxes in here. So are you talking about like property taxes or are you talking about income taxes?
Income tax, like that whole, like you're saying, like it's better to do it like after taxes when you're doing this, right?
Yeah, so if you're taking a certain amount of money out of your check for taxes, right? So what I would do is when tax season came around, just like when my dividend comes around, like, I would just say, I'm expecting when I do this particular month, I'm expecting an additional $3,000 from taxes, or I'm expecting to have to pay $3,000 in taxes or whatever it is.
Mm-hmm.
Does that make sense? So I just put it as for that particular month because you're going to do this every month.
Right. You see, it makes a little more sense for me to do it that way because seeing as I'm on base housing,
Okay.
the amount of money that I get for housing is automatically deducted from my paycheck.
Gotcha.
So if I don't put it, if I did it as far as consider that like a tax in my bring home, I wouldn't have anything as my mortgage and anything as my, or as rent, because it's automatically deducted from my paycheck. Where if I subtract the taxes and then add it down in here, add that to my income, then now I can change those numbers if I get a new house or change locations, and I can see better how that's affecting my income. You know what I mean? That makes sense.
Yep. Like I said, it's a framework for you to use. And there's,
it's awesome. I've done budgets a 1,000 times, and this one's the most. It's got a lot more added stuff to it. It's a lot better.
Right. Good. Thank you. Good to know. So now what happens is, so I just put some random numbers in here. Like, let's say you made $4,000 a month. You take out $400 for investing. You got 3,600. I didn't really put a lot of this stuff in here, but let's say you got a mortgage payment of $2,000, and you got student loans for $1,000. Let's see. Oh, that's going to be too much. We're gonna have to make some more money.
Dude.
I just want to make it easy. Okay, good. So then what's going to happen at the end of the month? So you have $5,400 of income. Why is it only $5,400 when I just put 6,000 up here?
Because 10% goes to investments.
Right, and that's not anything that just like the money comes out for your taxes, this money comes out for investing, and that money you cannot get. There's no filtering it. There's no dipping into it. Like, that money is forever working for you for the rest of your life. So now this person has expenses of $4,325, all right, which is right here. And then what's left at the end of the month, you have $1,000 in this made up scenario I just made really quickly. You'd have $1,075 left as your decision money. Okay. So now with your decision money, you should have 3, maybe 4 buckets. All right. I'll talk about the fourth in a minute, and you can determine your percentages. I just made up some percentages here. They don't have to be these percentages. You can make whatever percentage you want, all right? But the first bucket that you're gonna decide upon is what's called your no guilt money, all right? So this is money that you can spend on whatever you freaking want, and you don't have to think about it. You don't have to feel guilty about it. Did I do the right thing? Do I really need these shoes? Whatever you wanna buy, you just buy. You go buy the kids some toys, great. That comes out of this money, all right? So you can make this no guilt money 70%, you can make it 20%. You make it whatever percentage you want, and you just go into this thing and just change this 0.5 to 0.2, 0.8, whatever. That's how you change that equation. Right?
That's okay. That was my next question. Got it.
So then you just, in here, you can just type, I'm making this 20% or whatever it is you're gonna make it, all right? So that's your no guilt money. Your liability payoff, all right? So the goal is to get rid of these liabilities, all right? So you wanna throw some extra money, which we're gonna talk about in a little bit about this debt snowball, but you wanna throw extra money towards getting rid of these liabilities, right? So that way you can eventually get rid of these. That's gonna get you more money into your decision money, which you'll have even more, you wanna be investing and paying off your liabilities at the same time. All right. So, and if you could put a little extra in there, then great. That's where you want that extra to go. Yep.
Oh, okay. So you want to, all of these different buckets, right?
Mm-hmm.
Let's say, like you mentioned last time about, you have your Cash App, which is going to be your no guilt money, right?
Mm-hmm.
So whatever's on it is on it. So that would be the best case. That would be the best solution, right? To start also creating these buckets for us to siphon our money into. Yeah, yes.
Yes. And I say buckets, but they'll just be cards, which I'll explain in a minute. You're a little bit ahead of where I want to go with that.
All right, fly on the wall.
Right. And then also, but since you asked that question, like, these payments here should be your minimum balance payments. All right, so the minimum. So like if your credit card is like if you pay $100 a month, but your minimum is only 35, you want to put whatever the minimum payment has to be for these over here, your liabilities. I'll explain why that'll also be something that comes down the pipe. All right, because you're going to be spending extra money here to go into those. So just keep these whatever you mandatory have to pay. So you have your no guilt, you have your liability payoff, and then you're going to have your 6 month money. So you want to get to that point where your 6 months of expenses saved. Okay, so to get to your question, Crystal, now the way I do it and the way I recommend doing it is I don't have a debit card anymore. All right, so my money gets direct deposited into my checking account. All right, the debit card allows you to get into that checking account very easily, which is why I got rid of it. Okay, so so you don't want to be diving into that money in that checking account, right? So you can write checks out of the checking account if you need to, but the reason I have like blue and green on here is because I use my credit cards to pay all of these bills. All right, so I use my Chase credit card here, I use my Capital One credit card for this stuff. You can use all one credit card or whatever. The reason why you're doing this is you're going to budget your money and you're going to pay your credit card fully off at the end of each month. All right, so you're not going to be paying interest, but if you have to pay, you're paying $100 in gas, right? And hey, I actually put $25 and $25. So this all, every time you use your credit card, it's there. And then at the end of the month, you should have enough money to pay your $100 that you use your credit card for. But this is why you can't go into your debit account. You can't look at your checking account and start moving money around, right? You just leave it in there. The only time, so now, is this making sense? I see one person nodding. Spirit, you still with us?
Yeah.
What's wrong? You sound hurt.
I'm just a little distracted today. Don't mind me.
Oh, okay. All right. That's fine. So, now I do the same thing with my liability payments as well. Although I don't pay a credit card with a credit card, but my car payments I do. But the credit cards I'll just pay out of the, so I'll just leave those white. If you could pay your mortgage or your student loan or whatever, anything you could pay on the credit cards, pay on the credit cards. And then you should have like a little key down here. This is credit card 1, this is credit card 2 for your colors, right? If you use multiple credit cards. So the reason of doing that also is it's going to, I think I looked at it earlier today and maybe hopefully I didn't get rid of it. I think I did. Oh, nice. Somebody just scored. Oh, that's right, because I was working on my whatchamacallit. All right, so here's from Experian. So one of the best things you can do for your credit, again, is just, it's like, well, some people say, oh, you should have a little bit of a balance on your credit card and carry that over. But again, right from Experian, the best thing to do is just pay it off every single month, right? It's going to keep your credit utilization low, right? And if you already have credit cards with a balance on them, that's fine. And if you can't do this yet, then just don't do all of it. Do as many parts, maybe add 2 or 3 first. And then as your credit card, as you pay off your balance with the debt snowball, and I'm going to talk about in a little bit, then you can add more things to that card. But this will start getting you in a habit of, number one, it's going to quickly raise up your credit score. By the way, I don't think I'll be. So because I think I'm very open with you guys, so I have nothing to hide. Because I was unemployed for a while and living off savings and credit cards, my credit score went right through the crapper. And I'm back to fair. That's nice.
Yeah, I don't even want to see what mine should. Oh my God.
Your shit looks a
Look
lot
at it
better.
yourself. But I mean, here's by doing this, look at what I mean, I was in the 550s. So around last year, 570s. And just by doing this over the last couple of months, you know, where I'm going, right? So by using my credit cards as opposed to using my debit card.
Do you have a sheet like where it has the links to these particular websites, or I can just like type it in the thing so I can have it and then save it?
Do I have the sheet for what?
Like a list for like Experian. I don't know. I'm just gonna write it down.
Oh.
Experian.com.
Oh no, that
Credit
one
Karma.
is just Credit Karma.
So two things. When it comes to, I know like, since I've been like looking into my credit, I know like credit utilization is really important. You wanted to keep it like super low, right? Like 30% or something like that. Is that correct?
Yes. Under
So
10%.
for
I know
me,
they tell you 30%. 30% is nonsense. It's got to be under 10%.
so I can't pay none of my bills with the fucking credit
Well, you're not going to be able. You might not be able to do this at first. I couldn't.
at first,
Right?
yeah.
But you're gonna work on that, because that's why you have some of this. So if you don't have a lot of room on your credit cards, you might want to lower your no guilt for a little bit and make this liability payoff a little bit higher as a percentage. So you can start digging into there, and then as fast as you can, and then you could change those percentages later once you hit some of your goals of paying off some of those credit card debts. You know what I'm saying?
You know what, you're right. And like if there's like a Netflix, sorry to cut you off, Sporto, if there's like a Netflix or something, you can pay the Netflix off with that and just leave that alone. And that's building the habit of doing it, or the muscle of doing it. And then as you're right, yeah, that
Yeah.
just doing it, starting small, and then like when they offer you a credit increase, are you supposed to take those or what? What's the deal with that? Like I heard it's bad to increase your credit
No,
limit.
you're gonna get those, and you're gonna as long as your utilization stays low, and if you're doing this program. So the point being is you're not going to be using your credit cards. You're using your credit cards as a tool to build your credit rating, so that way when you do want to go buy those real estate, right, you have a much better credit score. And don't look at your credit cards as loans. Don't look at them as use your credit card like it's a debit card. Like if you don't have any money left in your debit card, you can't go and say, well, I'm just going to spend more. Okay, so the credit card is the same exact thing.
So here's because I hear what you're saying and I want to do this, but my problem is I suffer from this thing called CRS, can't remember shit. So on these credit cards, all these expenditures that you use, now I understand food obviously, but things that come out regularly like your Netflix or your YouTube or whatever,
Right.
I don't know of a way that I can set it to where it'll go to that credit card. Like mine automatically gets taken out of my checking account.
Right. You could
Is
say,
there
yeah. I went to every single one of the things I'm planning. I went and looked at my I brought out a statement for the last month of my checking account, because that was on my debit card, and I looked at everything that came out automatically, and then I just went into that account and switched it over to my credit card.
okay?
That's what it is.
So that's what I mean, because that's my thing too, is when you're talking about these different buckets, I need actual fucking buckets. You know what I mean? I can't just have it in my checking account like, no, there's a bucket in there. No, I need to see this actual bucket. And
right. So here's the thing that this takes all. I know it sounds because you're learning it for the first time, but here's what I do. If I'm buying food, like my grocery food, I use my credit card. If I buy gas, I use my credit card. Everything else automatically comes out of here. My car insurance, blah, 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 blah. Everything else does. Now, if I want to go out to dinner, I went out to Hibachi the other night, then I use my Cash App card.
Money. Yeah.
Right.
Got it.
So that's it. Anything that's not, so my credit card gets used for these things, which is basically food and gas. Everything else automatically comes out of there. I don't have a debit card, so I can't take money out of there. All I got is what's in my Cash App card and my no guilt money. That's it. And everything else is taken care of. And this is actually how much money I have. I don't have because people look at their checking account sometimes, they go, oh, I got like $6,000 in here. I got money. Let's go do something. Let's go spend it.
Bad.
And that's
Get that
that's-
poor
that's-
mentality popping,
right.
right? Lord, it's like, let's go.
So does this make
Yeah.
is this making sense? Now, if you
100%.
if you got that
it's
in
good.
your Cash App card or your no guilt bucket, hey, cool, you know. But the whole purpose of this is so you don't look at your checking account and go and spend more money than you're. Oh, I got some extra. Let's go do. Oh, you know what? I got enough money. Let's just go do this right now, and I'm gonna end up paying. Paying Peter to, or sticking from Paul to pay Peter, or whatever the heck that phrase is, right? So
Paying Peter to, of course, no, never
Stealing
mind.
Paul,
I was
Paul
about
and
to
Peter are
mess-
both stealing money from you, whatever,
Right?
however you're doing it.
I get what you're saying. So literally we just need to like sit down with all our stuff, look at it in black and white, and then start allocating those funds and set up a process. So like for me, like it would be like, let's say I needed to, like I can go directly to my Paylocity and take out a percentage, whatever the percentage is that I have over here, and funnel that money into my, I don't know. I don't want to know what, actually forget what I said. I don't
Here's
know
what I
I'm
do.
talking
Once you do this, once you do the spreadsheet, right? So I do this
Yes.
I do this every week, right? So if this was broken down into the fours, right? So if I actually, so this is
about. Okay.
what is this, $1,500, right? So that's there, and then if I put 50 here, again, just making up some stuff real quick here. Let's just make this 100 so I can do math. All right, and we'll make this 200 so I can do math. So that's $50. This is another $50. This is going to be $12.50. This is going to be $2.50. This is going to be $400. All right. So in my no guilt for the week, I got $194 if this was my actual scenario. Right. Got my check of $1,500, 150 goes into my investing, bam, right. So I sit down, okay, I just got paid. It's Friday. Let me do my stuff. What was my check? It was $1,500. Great. Let me transfer $150 into my stock portfolio, wherever you're investing in, right? Into that account. Right. The rest of this I don't got to worry about because it's all going on like credit cards. I don't got to do anything. I only just got to pay my credit card at the end of the month. So all that money is just going to stay there. I'm going to take $194 and put it into my no guilt fund, onto my Cash App. And I'm going to take $116 and I'm going to throw that extra into the debt snowball, which I'll talk about later. And I'm going to take $78 and put it in my savings account.
And this is what you're talking about, the every week that we import where we're actually getting, or right? Yeah.
I do this every week.
week.
Every paycheck.
I see. It's not like a set it and forget it kind of situation.
Yeah, you spend
Gotta pay
30
attention
minutes
to
doing
it.
this, and now everything's there. I know how much money I got, and even though, and if I don't have a lot, because here's the thing, people don't like this because like this number might be small, and they're like, I want to have more money for me or whatever. It's like, well, you know what? If you spend all your money, you're not gonna like at some level. You're just setting your levels differently. You're just saying, okay, this is what I got.
That's the part I had to explain to my wife. I was like, look, we have to get rid of the instant gratification for long term
Delayed
gratification.
Yeah.
And what's going to happen as time goes on, if you're putting this extra money, maybe you make this higher. Maybe if you're like, look, let's struggle for two months and we'll make this 20% and make this 60%, right? And then I can pay off these 2 credit cards and this other thing or whatever. So now your decision money is going to go up because your expenses are going to be lower. That makes
Right.
sense?
It's kind of like
yeah.
that Tom Ferry
Right.
video on YouTube where he talks about how like poor people make money, like how they get their money. And you know how he does the graph where he's like, oh, this is how poor people make everything. All their money goes into one account.
Right.
And then they just use that to pay everything. And then he
Yeah,
goes
he
on the
was-
next sheet and it's like some mastermind plan where it's like a beautiful
Yeah,
mind.
it's a
and all
watered down
this-
version of that. But that he was talking about also having, going into an LLC because he was talking to real estate people in that
Yeah.
video. But this is kind of, this is this is a program. So, hey, let's say for some reason I took my no guilt money. I went to Vegas and I ended up with an extra $5,000.
Ooh.
Right? Okay, 650 is now going into that, right? And I got more no guilt money, and I got this. So like it's when so it's a process that even if, no matter what happens, or if you're short, what happens if you're short 1 month? Okay, well, I know I'm going to be using my credit cards. So I want to have the credit cards there. So if you are short for some reason that you have a week to go, like, I don't know, boss stiffs you on your pay for that particular week, I'll pay you next week or whatever, right? So that's why you want to have that credit cards doing that, so you don't have to worry about that. And then you might be negative. You might say, okay, I can't put anything more in there. But at that point, you're building, like, by the way, your no guilt money, it's not like my Cash App card, I got to get it to zero by the end of the month, by the end of the week, right? So it's like you just know the money's in there. If I don't got to spend it that week, I don't spend it.
Get those scratch cards.
What do you mean it doesn't have
It's
to go
like,
to zero?
way I can do it. Let's go.
All right.
I do have a question though on the
Yep.
so you're talking about putting the money in your portfolio, your investment money. I'm kind of new to this Webull thing. So if I say, using my old example, $800, if I just put $800 into my Webull account, it doesn't mean I have to necessarily buy a stock with it. It's just sitting there in that account.
Right.
And is there any penalties for having it held there? Like if
No, there's no penalties. It's just a matter of you're not going to be getting the interest you would in a savings account, which is 0.006%.
right.
Whatever. So I don't know. That's not a big deal to me.
No, right.
Right. So I'll put it in there because I just know it's in there and it's separate. I can look at, here's my investments and here's my bills.
Okay, I was just curious because, like I said, everything's got to have its bucket, and a realistic bucket. And if my Webull account could be that bucket, then that's what I'll use it as.
Yeah.
Okay.
Yeah. Any money, like I mean, I'll put it in, like, because I have E-Trade, Webull, Public. Right now, I'm just loading up on my Public account. I don't even know where else. What was that? That's my 3 big ones, I guess. Yeah. So, but I have like 3 accounts in E-Trade. So I'll just stick them in where I want. And then like during the week, like if I want to, like, let's say I have, let's say there's an opportunity to buy a particular stock that's an OTC stock, right? I can't buy OTC stocks on my Public account. So I'll just take the money out of my Public account and move it to my E-Trade, and then I'll buy it there. Because it's all investment money.
Okay.
Even though it's in different accounts.
Okay. Yeah, I was just curious as where I was gonna park that money until I decide to invest it.
Yeah, you're not losing much by being in some of these accounts actually do pay you like some of the crypto also. Like you could put in I have my Gemini account. I also stake my Dogecoin, and it gives me a better APR than my checking account. But again, that investment money is, you're not like trying to use it. You want to have that to be using for investments. It's not
right. I just needed a place to park it because I suffer also from, hey, look at all that money.
Right. Well, you have to understand, like, the money that's in those accounts is never being spent for anything other. The only thing that comes out of there is passive income.
Right.
Like once money goes into your investing, it's working for you for the rest of your life. Like, it's never going to be spent. This 150 is never going to get spent ever. Only thing I'm going to spend is the little babies that the 150 has.
Right.
as revenue that I will then either reinvest or whatever. Right. Sturdy, go ahead. I'm sorry, your hand.
Oh yeah, just with what he was saying, is that account, like you need to liquidate it? Is there any fee? And also, is it better to put it in the money market account like we were talking about earlier?
That's a decision you're gonna have to make on where you want to put it that's better for you. I like to have it
Right.
in I like to have it in my stocks accounts because because sometimes I'll, especially like Webull, because Webull's the only one you can buy stocks pre-market. So I can't move money. I mean, you guess I could, well, if I needed to sell something and move it into Webull, I couldn't do it if I'm trying to buy pre-market stuff. So you're getting down to the granularity where you're going to have to make that decision. Like, it's not a huge thing. Is it better? So much better to be here or there. To me, it's wherever.
Right.
You want to put
I
it,
just
fine.
meant like
As
as
long as you're
far
not
as
spending it.
yeah, as far as yeah, I know it's an individual choice, but as far as like an interest or any fees for having it there, here you already answered if there's any fee for having it there, but is there a fee for taking it out?
No, not that I know of.
Okay. Okay.
Right, and that's
What-
just
Yeah.
for me. It's like if I want to take it out and invest it in, say I got enough money to where I can put a down payment on a house that I want to use as rental property.
Mhm.
I just need a bucket. That's it. I just need a bucket, and I don't want that bucket to have a hole in it. I want that bucket to just be, something, rather than going to another bank and saying, okay, this bank is for my investments, this bank is for my checking, this bank,
Right. Yeah.
I've already
Yeah,
got.
I that's why I was asking the questions, is because I probably need to do that myself.
Yeah. This.
I just need
Everybody have a
place to
public
park it.
account?
What's that?
I know you do, Will. Does Spiriton and
You said a public
do you
account?
guys have a public account?
I don't have a public account.
No.
What?
I've only got Webull.
What about you, Christelle? Unmute yourself.
I was gonna say, it's not
Do you
as
have a-
fun when I'm not on mute.
Do you
But
have
what
a,
I was gonna say is, I think it will be beneficial to have either a kind of like a cheat sheet, so to speak, of like a list of the different things where people can go and they may not know where to like check their credit, or like whether it's Credit Karma, they're probably using an affiliate link somewhere there for you, or like all the main three bureaus, or even. Oh, okay, never mind. I thought you already had it, and I was like, I missed the tab or something.
No.
And I'm sure you have all of these awesome like trading websites or platforms that also offer you affiliate links for like whether it's a free stock as well. That would be pretty cool, where like even if they already had it, maybe you could either put it in the group chat when you go over like the third class or something like that. That would be really great because I was actually already going to do that with the credit stuff. I go into the main bureaus, but I was like, oh shit, like I didn't even think of the Credit Karma like that. But yeah, so
I've got Credit Karma.
that would be great. Even if,
Experian.
yeah, what were you saying, William?
I was saying two things. Number one, I know Christelle has a public account because she follows me on public.
That'd be incognito, but
Bill and Spirited, you guys got to get public accounts. Still doesn't cost it. You don't even have to put any money in there, and you get free stock.
I'll definitely do that, because that's another thing I need to. I've only, like I said, I just got into the Webull.
Yeah.
And if anyone doesn't have Webull, I could use that. Someone to come on, because I got
You could get
6 free stocks waiting for the next person I get entered in, or to download it. But yeah, do you get something for Publix? Because I
do.
could.
You get not 3 free stocks. They give you it's a couple of bucks. They give you maybe $5 or $6. Although I did get $44 of Tesla stock from one of the people, which that was kind of cool.
Nice.
And you guys, they give it to me and they give it to you. So, but the cool thing about public is it doesn't necessarily, you can buy fractionals. So,
Nice.
And as far as that goes, it's kind of interesting. Like, it doesn't just say, oh, you have 4.8 shares of this stock. It says you have, $70 invested in this stock. It gives you actually the cash number, which is kind of cool too. But yeah, I like public a lot. Also, you can see what other people are doing. You can follow people. You can see, like, all my trades are public on there. So when I do something, so people always ask me, when are you going to sell? When you sell your AMC, could you tell me? I'm like, yeah, sure. I'm going to contact every single person before I make a move. But if I do it on public, then everyone who's followed me could just see, hey, I sold some of this, or I bought some of that.
I'm not selling AMC till 10,000 a share.
That's cool. So I'll send you guys the links for that afterwards. Then they give you, and you don't have to, unlike Webull, you don't have to put any money in there to get the free stocks. They'll give you like $3 or $4 or 10.
Yeah, I got like I got $8, and I think I watched it go up to 9 and sold that stock.
Spirit didn't like that. She left.
Um,
They're going to doing that. All right. She's gonna-
oh, I just got that. It's so funny. But so all right. So what I was thinking is you can tell me what your thoughts are, even though I know like this is not like you're not telling anybody to go and do anything crazy with their money or whatever. But so I was thinking like I have a credit card, but I was thinking of getting a secondary card, but maybe making it like a secure credit card. And that way, building it that way, doing the utilization thing. What's your thoughts about that?
You can do that with a secure credit card. It's the same thing.
Is that smart? Is it not smart?
No, if that's what you need to
Literally,
do.
someone told
build
me
up
to
your
go buy a
credit
bunch
score,
of.
there's
Someone
nothing
told me
wrong.
like if you want to help increase your credit, like you can just buy like a bunch of different secure credit cards, and that helps. I don't know if that's.
No, well, I mean, it might help a little bit. You're secured, but usually a secured credit card, they won't let you have a balance much more than what you put in there.
Yeah, so then like, but after I think a certain period of time of like you've made payments,
Mhm.
then they actually just give you the credit card and it starts you all over again. So maybe,
Yeah.
okay, so if my card is like $1,000 and then I just get a secondary card, but I get like a secure credit card for like $500,
Mhm.
then my utilization would be like $50 because I'm still technically paying off the card. So this way I can start that process, or do you think it's backwards? I don't know. Just never mind. Just forget it. Never mind.
Let's talk offline on that. I can help you with that.
All right, bet.
All right. So let's talk about. So are we good with this? Any other questions as far as the budget goes and what goes where and how it works?
Nope. Let's go to the debt snowball.
Okay, cool. Now, also, what's kind of cool
I'm
here
good.
is.
I just want to apologize. I'm having some issues with my earbuds, so
Okay.
that's why I got kicked off for a minute, but trying to fix it.
I figured Christelle offended you in some way. So what's kind of also cool on here. So, oh, by the way, so when you do this, let me go to my actual one. I don't have my actual one. When you actually, I'm gonna open my real one. Oh, it's down here. So what you do is when you're actually doing it, so you say like it's like September 2021. So when you get to the end of the month, you just make a duplicate of this one. Just make a duplicate of that one, and then just name it the next month. So you can always go back. It's kind of cool also to go back over time. I have some of these that go back a couple of years, but you just have each month, because some months are 5 months or 5 weeks as opposed to 4. So does that make sense? You just make a duplicate and then just erase all the other stuff. Just don't erase what's in the yellow. All right. Back to this. All right. We went over the rule 72 last week. Back in here. All right, so let's talk about paying off your debt super duper fast. I do have a video on this, probably in the wrong account. Assuming I have it on my YouTube page. Let's see real quick. think I have too many tabs open.
Good everybody. It's your boy King Legacy here with another reaction video.
What up, King Legacy?
King,
Calm down. All right. I like watching young people watch old react to like 90s basketball play. Just in case you're wondering what I'm watching on YouTube when I'm not working on this stuff. Ideas. So I should have a video up called eliminate your debt 2 times as fast. So if you want to watch this in detail on how to do this, I have a video. It's 25 minutes long, which goes into a lot of detail, which is probably not what I'm going to do right now. But here's how the debt snowball works. All right.
Sadly,
So-
I've used this method multiple times.
Oh yeah.
Got myself completely out of debt just to get right back into it and then snowball it out of debt. It really works, but you just got to keep out of debt after you do
Right.
it.
Well, once you have the other system in place, then see, like, here's the thing: is when you're getting started with all this, you have all these problems and issues that you got to get through. But then eventually, it gets to the point where now, if you really have your assets start making you money and you're cutting down on your liabilities, now you have more money. You'll have more money into your no guilt fund. You'll have more money into, like, it's like, okay, I don't gotta get, what happens when I have 6 months of expenses saved? Now I don't know, all that money can go into some other bucket, you know? And so it starts building up. So, so here's how this works. So this is an example, right? So what do most people do? So let's look at this person. Let me do this equals here. All right, so this person in this example, this is just an example here. It's in this that I'll make this a separate spreadsheet, but it's in the money management, one of the tabs. Actually, you know what? Let me write that down to do that, so I don't forget to do it. So this person, they're used to having they're paying bills minimum of $4,300 a month. This is not including their expenditures. This is just that they're paying for their liabilities, right? So they're used to this, right? They got their mortgage, they got their student loan payment, their two car payments, and their credit cards, right? They got a $500, $1,000, $5,000 credit card, and this is what they got left on their mortgage and their student loan. So just this is a medium to maybe below average household, right? Depending on what part of the country you're in. So you're used to spending this $43.85. But what most people do is when they pay off like a credit card or a car payment or something, they go, great, I don't gotta make this $300 car payment anymore. Yippee, I got $300 extra to go spend whatever I want to spend on, right? They don't go, hey, I'm used to spending $43.85, so let me just keep spending $43.85 no matter what, all right? So the way this works is you pay all your minimums, okay? The minimum amount you have to pay, and then anything extra, anything that's coming from that, from this liability payoff, whatever that is, whatever that amount is. So I use an example of $100, right? If you just had an extra $100 a month in this scenario, what would happen, all right? So what would happen is, so you have regular $35 payment. How fast could you pay this off? So $35 payment, now we're taking an extra 100 and putting in there as well, which I only did 85 for some reason. Why did I do that? Oh, because I was using $50 at first. So whatever, this is gonna be even faster than I'm showing you here. So anyway, the point being is whenever you pay off something, right? So this one, I have them paying Yeah, the first one's just messed up. So good thing I caught that. Yeah. Okay. Yeah, so this first one should be more. But let's forget that. Let's just say
This is a hundred.
good.
This
This
is
is
a.
supposed to be
This
$100,
is
but I supposed to. It's supposed to be 100. So this should actually be different. This should be 135. Whatever 500 minus 135 is.
This is an extra $100 from. This is after we've paid off a bill.
This is the
This
extra
is not
$100 that would be coming from your bucket called liability payoff.
because we've already taken care of paid off one of the liabilities. We've eliminated a liability.
No, so you have your base, you have your regular stuff here, right? So this, whatever these things are, loans and credit cards and car payments, liabilities, are
Mhm.
just this.
Copy.
Okay, so that's your balance, right? And then this is your monthly payment that you're making towards the balances. Make sense?
Yes,
All right. So
got it.
I just messed up the math. That's all.
So the extra $100 is just a situation where, hey, you get an extra $100, right? You want to scratch off. Someone gives
No,
you.
no. It's built into your budget, right? Because your budget, you have 3 buckets: your no guilt bucket and your liability payoff. That's where this is coming from, that extra $100. So in this scenario, it'd be an extra $345. But
Okay.
does that make sense?
Yes.
You sure?
No.
Okay. So you have your income, right? 6,600 comes out for investing, you have $5,400
Yeah.
left, right?
Mhm.
Then you have all your bills,
Correct.
right? Expenditures plus the liabilities. So
Mhm.
that comes out to 4,250. So 5,400 minus 4,250 is your decision money,
Yes.
1150. Now that 1150 is going to get divvied up into these 3 buckets. One of them is going to be no guilt, one's going to be liability payoff, and the other one is your 6 months.
Correct.
So whatever percentage, if I made this percentage maybe let's say 10% instead of 30%, maybe it wasn't very important to me to pay this all off. I wanted a lot more no guilt money. Now it's like 115, right? So that's where your extra $100 is coming from. Does that make sense?
Yes, it does make sense.
Whatever's going into this liability payoff is what I'm talking about, this extra money. It's not extra. If you won $100 on a scratch off, that would go here in other income. And then that $100 would get them divvied up. $50 would go
Also,
to no guilt.
We gotta track all the money that we get as our income.
Every month, anything that comes in is income.
Oh
You do it
wow.
once a week.
Okay.
How many often are you? Most of the time, you're just getting a paycheck. Most of the time, you're not going to have anything else. But
I know, but I'm trying to get some paper. So
Well,
there
if
we
you get-
go. Like eventually it'll, be like hopefully stereo will, something from stereo or whatever. But yeah, so I get it. I get it now. So
right.
I'm right there.
All right. So at the end of the week, you would figure that out. But I'm just doing monthly. All right.
Yes.
All right. So now back. I don't know why I have 2 of these open like this. That both not there. It is. Okay. So this is really annoying me. I got to fix it. Sorry. 500. Oh, it's gonna mess up everything else too. Oh, whatever.
No, it's okay. I understand the
Fix it later.
concept.
So let's just say your 35 plus an extra 50 would be $85. So, but if it was 100, it would be $135, right? So whatever the extra is, plus whatever your regular monthly payment is, your minimum payment, that's what you're going to pay your first month. Okay. Everything else, you're just going to pay the minimum. That's it. Okay. So this next one should be, I'm going to guess that. I guess I did it right after that. 415 minus 135 is 280. Yeah, I did it right after the first one. I just missed this first one, right?
Gotcha.
So if you're doing an extra 100, right? So now I'm doing $35 plus an extra 100. Now this balance is down to 280. Okay. Now, if you're using this credit card, let's say you're doing the thing from before and you're like, oh, but I'm using this credit card to pay off my other stuff. Well, then the other stuff should be paid off by your regular money out of your
Already.
business anyway, right? So this is just the extra, right? So now you're down to 280 after month 2. After month 3, you're down to 145. All right. Now after month 4, you have $10 left that you have to pay off because you're doing 135 every month. Now month 5 comes along. You've already paid off. Now the card's paid off. Okay, it's down to 0. Now what most people again would do is say, well, God, now I don't got to pay $35 anymore. No, you're used to this. You're used to all these things. This is what you're normally paying off every single month. You're going to keep paying that amount no matter how much more money you get until all your debt's gone. Right? So this extra 35 plus the extra 100 are now going to go into paying credit card 2.
Card number 2.
Right? So if you see this one, this was going down because I'm only paying $50 down. But then I'm going to take, after I pay 135 minus 10 is $125. So I'm going to take the $125 that I would have paid into here, because I just had to pay this last $10. And I'm going to take the $50 and put it there. So now every month afterwards, you see I'm paying 185, the 100, the 85 here, and the extra 100 from my payoff, right? And so watch how fast this goes down, right? So now it's, if you were just paying $50 every month, but now it goes, as soon as you hit here, now it goes down much faster.
Yeah.
And when you hit this 120, well, now I'm going for credit card 3, which has $5,000, all right? So I'm only paying $100 minimum. But then as soon as this goes away, now the rest of this is going into this card. So I'm paying the 100 plus the 85 plus the extra 100 here that I would normally be paying no matter what.
And you start to pay off the smallest debts first?
Yes. There's 2 different philosophies. One philosophy is you pay off the smallest interest, the one that pays the highest interest first. And then the other philosophy is, do the smallest first. I subscribe to pay the smallest thing off first because you want to get the snowball rolling, because your mortgage probably has the lowest interest rate, or maybe your student loan, but it's going to take you forever to get the ball rolling.
So I've heard it as there's avalanche and then there's snowball. So snowball is what he's describing, but if you hit the lottery and could pay off your mortgage, I mean, this is super hypothetical, but pay off your mortgage, or even look at one of the middle guys and pay off the $10,000 car payment.
Yeah.
You got $10,000 came into your lap, you pay off the $10,000, and then most people would look at it and be like, well, that's $300 more a month I got to just spend. Well, what he's saying is to look at it as, no, I'm going to take that $300 and then you snowball it, you crash it down. You go to your next highest and crash it down until all those are paid off. Because if you're paying $300 towards that one $5,000 debt, now you're adding 300 plus, so you're paying 400 plus your extra 100 is 500. And now you're paying $500 a month towards that $5,000 bill, and it'll crash down. And then you take that $500 and you put it to 1,000. That's 2 months. It's done. Then your 500, it's done. And then you snowball the bigger ones.
Yeah. So what I would do is with that 10,000, if I made it, because I want to set the habit of no matter what, 10% goes into investing, right?
Into investing.
That's why if you get something, that's what I was saying before with her, and again, just different philosophy, but this is just my philosophy. I would stick that any extra money,
all the money
into here, and then the 10% comes out, helps your investing, and then the rest of it goes down here, and then you have your liability, whatever that extra is, that's in here, that goes. So like when I do my monthly payment, right? When I do my weekly budgeting, I take my money and put it into no guilt. Whatever's here, this 116, I would just go, okay, what's the next card on my debt thing? I just throw it right in there right off the bat, like right on payday. So I do 194. I would stick that in my cash app. I put this on my Chase card, or whatever card it is, or whatever it is that I'm paying off, mortgage, whatever level you're at in your snowball. and then this just goes into your savings account. And then you're done. You don't have to, you're not thinking about any of this for the rest of the week.
Okay,
Make sense?
absolutely.
Spirited?
Thank you for going.
Oh, sorry. No.
Yeah,
It,
everything's clear. I just wanted to know, like, I'm kind of glossing over this part because I have no I have no liabilities and no debt.
Okay.
So I don't have to do that part.
Got you.
Thankfully.
So then what you're going to do
Winning.
then is what I would, so then you're going to move to the next phase, which is then you're going to do your goals breakdown, which I'll go through next. Because once you get rid of all your debt, then you're going to start sticking your money towards your goals. Or what I would do if I was in your scenario is change this, change the liability payoff if you don't have any liabilities left, and then put goals, and then start save. So now you're putting it towards your goals. That money that you would have been paying for your debt, put it towards your goal money.
Okay, yeah. So that's kind of what I was trying to frame my mind around. It's like, what should I be focusing on since I don't have? So yeah.
All right. So you're just advanced. So we'll get to, I'm going to get to that next. So, but yeah, a lot of people have an issue with this debt issue. So, so Christelle, I just want to make sure this is, so even with all this stuff, I mean, I actually broke this all the way down. Like this person is paying off their $200,000 mortgage in using this technique in 5 years. Right? Because by the time they get rid of everything else, now they're putting $38.90 a month into their mortgage payments as opposed to $2,500. Right? So because they're taking all this, they're constantly paying this money. So it's just an acceleration of, you know, most a $200,000 mortgage is probably like a 15 or 20-year mortgage. So they can be debt free. And like, so people sometimes will look at these numbers and go, I don't know if I can get out of all my debt in 5 years. It's gonna take me forever. But it's not. It doesn't really take you forever if you follow the right procedure. And don't just pay off the credit card. Oh, I paid off my $500 credit card. And then they're like, oh, great. I don't have to make this $35 payment anymore. Cool. I'll just spend it willy-nilly. And then I start spending this 30, and then I'm like, hey, you know what? I got this credit card with no balance on it. Let me put some more money on the credit card. That's basically how people work. And then they got to go back to doing it again. Like that's what Bill said, you know?
And so basically credit cards should just be used to pay for expenditures. It really shouldn't be for like, you know,
or
yeah.
So my question is, it kind of circles back to what, and you know, I could be going down a rabbit hole here, but what Will was saying about playing this game, the money game, and it seems like you really can't be financially free or set up without accruing debt. So,
oh no, that's totally, so again, there's a difference between good debt and bad debt. That's why I was saying before, there's an asset debt and then there's a liability debt. Okay, so this mortgage is like someone who's living in their own house. Okay, so that's a liability. That's a bad. Okay, so everything that's a liability is an asset to somebody else, right? So it's a balance. That's why it's called a balance sheet, right? So a banker, somebody who's selling mortgages, they're going to tell you that your biggest asset is your house, right? Or they say the biggest asset you have is a house, but it's not your asset. It's their asset, because this $200,000 mortgage that's going as a liability that you're paying money on, for the bank, if I looked at their financial statement, where is that mortgage? Is it an asset or a liability? Is it making them money, or is it taking money away?
Yeah, it's making them money.
Right. So they put your mortgage on their asset sheet. They're getting $2,500 a month from you. So for the bank, it's an asset that's making them money. For you, it's a liability. So yes, a mortgage is your biggest asset, but it's not your asset. It's their asset. It's the biggest asset they have, right? So what Bill was talking about, so now let's say if you have, when he was talking about when you're playing cash flow and you're looking at those cards and it says small opportunity, $200,000 mortgage, $4,000 down payment, positive $200 a month cash flow, right? What that actually means is you're going to take out a loan for $200,000, right? It's going to cost you $4,000 to do it, right? That's your down payment, right? So you owe $196,000. But the payments that you're going to make on the house, let's say they're $2,000 a month, you're going to be charging rent for $2,200 a month. So you're getting a $200 cash flow because your rent's getting paid, your mortgage is getting paid, and you're getting an extra $200 every month. That's what that card means. So you do have $200,000 in debt, but the debt's being paid by somebody else.
And so that's an asset debt.
That's an asset to you, right?
Yeah.
So that would be how many, by the way, how many houses would you buy if you could make $200 a month per house?
A lot.
A lot. You should buy as many as you should possibly
Yeah,
can.
to me is like, yeah. So yes, that's the stage, that's the phase I'm in. I'm like
Right.
trying to figure out what, since I have no debt and no liabilities, I'm trying to decide on what asset debt to use my money for.
Right. Yes. So you should start. So it's like, well, do I want to do dividends? Do I want to do real estate? And then if it's real estate, it's like, okay, well, you're gonna say, okay, you're gonna do the numbers. So like for example, my mom and my mom and my dad have a house in Vegas, right? But they're paying whatever they pay. Let's just say, I'll just make up numbers. Let's say they're paying $2,000 a month, but they're renting the house out for $1,100 a month. So I told my mom, like, so you're basically subsidizing this person's rent for $900 a month for them to live in your house.
That's
Wait
no.
a second. Wait.
Why you gotta look at it like that, Maddie?
Because that's a bad deal. That's where you want to look at the deals. Like, you're losing $900 a month for this person to live in your house.
Yes.
Okay, I see what you're saying. The point is you want cash flow, even if it's a smaller amount.
Is it
So
a
even
family
though
member that's doing that?
No, she said they bought the house at the height of the market in like 2008, and then they were
Oh,
upside down
no.
on it for everything. And they were living there for a while, and then my dad passed away, so they don't go there anymore. So my mom's renting it. That's all.
Gotcha.
She's not investing in anything, but I
Yeah.
keep telling her
She's just trying to recoup some of the money.
Yes, correct. That's what she's doing.
She's not
Yeah.
losing completely out. Gotcha.
Well, she is
Damn.
losing. She's
I
losing
mean, yeah,
$1,000
but
a
she's
month.
it's still
But
going
yeah,
towards
Don't get
the
it
mortgage, so
twisted.
eventually she could.
right. So we're going to talk about that next, which is the net
She's
worth.
a roommate that doesn't live there.
It's like an incomplete asset.
Right. So the point I was trying to get to, though, is that there are good liability. There's good debt and bad debt. All right. So if you're creating debt, like they say, there's other people's OTP, OPT, which is other people's time, and OPM, which is other people's money. So if you're using other people's money to make you money, that's the way you do it. Right, which is good debt. But when you look at your credit card, right, the credit card's on your liability sheet, right? So guess where it is on your credit card? On their side is an asset to the credit card company, because they're making 29% interest, and you're making a payment to them every month. So when you start understanding this cash flow, you start looking at it, you go, okay, so your car is a liability to you, but it's an asset to the bank. And that's why they will loan you money on cars and houses and whatnot. But if you go to the bank and say, I want to borrow $200,000 to go buy some AMC stock, what are they going to say? Get the hell out of here.
They'll laugh in your face.
Right?
Yes,
Because
yes,
it's not
yes.
something they can really collect on, right? So
Right.
they don't see that as an asset. All right, so I think we're getting this process, but yeah, so so that whole portion of how do we find these houses, how do we do all that stuff, like that's the point of this book, and the point of all this stuff is to get you at least thinking that question. So you're like, okay, well, how do I do it now? That's not what he's answering in the book, but he wants you to get to that point.
Question.
Yes.
Just keep going. I'll remember what I have to say.
Okay.
Sorry about that.
That's all right. All right, so let's talk about net worth. So net worth is depressing at times. I think I was negative net worth for about 26 years of my life. So it's nice when you get the positive. All right. So your net worth is, if you passed away today, what are you worth? Okay. So it's a good, now the only thing when you do your net worth, and this can be something you could put as a goal for yourself, like to get your net worth to a certain level. So all you do is you go through and you put in the value of everything that you potentially have. Now, the only thing that's weird in here is when you talk about like your houses or like a car, or some people will say some of these things are worth something. You only put these things in. So like your house is, you don't put, oh, well, if I sold my house in this market, I bought, like, my mom bought her house for $20,000 in 1970 something, right? And today it's worth, you know, a lot more than $20,000, right? But she's only allowed to put $20,000 in here because that's how much she paid for it. Right? It's a different, we're not trying to figure out your actual net worth. Like for example, like when they say Bill Gates, or not Bill Gates, Jeff Bezos is, or Elon Musk are the highest, they're the richest people in the world, right? They're talking about net worth, right? Elon Musk doesn't have, you know, $180 billion in his checking account. Okay, like that's not how a net worth works. I mean, like sometimes I've had somebody said to me, well, if he has got so much money, why doesn't he help people and, you know, give to the poor? I'm like, because then he would have to sell it. He's got $180 million or $1 billion worth of Tesla stock. Doesn't have in his checking account, so he would have to sell portions of his company in order to do that. He's not going to sell his company to go and, you know, whatever. So
Right.
So the point being is it's a different calculation than cash. People don't really understand that sometimes. So so this is something you want to fill out yourself, figure out what your net worth is. It's cool to see it go up. So it's like anything you have in cash, which could also be in your checking account, your savings account. If you have any crypto, if you have precious metals, you can do, you know, whatever their value is today, or you can do it by how you bought it. But anything that you might have a payments on, like I wouldn't even put cars in here because they just go down in value. Houses you could put in here, and then what you do is like, so house one, you would put that, and then the mortgage is going to be your liability. So your house you might have bought for like $300,000, but you have a mortgage of $250,000 left, right? So now your net worth is $50,000. Make sense?
And it's the same thing. So here it would be all of the individual stocks, like if they're appreciating. Am I using the right words here? Like,
yeah, you can do, like, it makes it easier for me to just go through each one, but you can add all the stock accounts up. Like I have like 6 of them.
you just insert a row up, and then you just add each individual one. So
So
this
I
is
would
the way you can get it.
if I wanted to add my Webull account, right? So I got
Oh, okay,
$200
okay,
in Webull.
okay, got it.
Makes sense.
Coming in loud and clear, Captain.
So yeah, so this is just examples. So you can do that. So you just, all your assets minus your liabilities equals your net worth.
Ooh, you fancy. My network is.
I have a question really quick, with regard to liabilities and assets and expenditures. So my statement before, maybe it may be incorrect if, depending on the answer. So I sold my house. So the house was a liability. I sold my house. I had um, the proceeds from that, and then, I now lease, so it's basically a rent. So is that still considered a liability or an expenditure?
It's expenditure because you don't own the,
Okay.
you don't own it.
Yeah, so it's not a liability.
There's no way you could pay off your lease at some point, right?
Yeah,
You would just stop leasing.
right. It is, yeah, it isn't an option to
It's not a lease, it's
buy,
an option to
but
buy, right?
yeah,
And even then, it would still count as, all you're doing with a lease with an option to buy is you're just lowering what your purchase price would be with part of your payments. So
yeah,
it's still not a asset.
yes,
It's just an expenditure until you would actually.
until it's bought, yeah.
Question.
Go ahead.
So, all right, so if we purchase something from your Amazon link, right?
Mhm.
Like one of the books, like how does that work exactly? Like it's automatically you get credit for that, right?
I think so. I don't know.
When you use your link.
Yeah, I think I get something. I don't know. I'm supposed to get, I haven't checked in a while, so, because I haven't been promoting it.
All right. But let's say somebody bought it, you checked it. Let's say, for example, you're looking at your assets.
Mhm.
That would be one of your lines, right? If it was like,
So when I
it'd be
do
like,
net worth, so you would only do your net worth maybe once a month. You can do it once every 6 months. You don't really need to, I mean, you don't have to do this all the time. Even once every 6 months would be fine. It's just to see where you are over time. And then you would just take this whole thing, make a, you just, so like, let's say you would name this. So this is the template right now, but I would just make a duplicate and then name it like net worth 2000, September 2021. And then you do it in, I don't know.
in December.
Yeah,
You want
you
to
do
do it
whatever-
like
whatever you wanna
quarterly
do
or
it.
something, and
Yeah, you just look at what your net worth is again. Because as you lower your liabilities, your net worth is going to go up, or as you add more assets, your net worth is going to go up.
okay,
A little bit better about it.
yeah.
I have another question.
Mhm.
So, I have a property that I split with my siblings. It's, for my family estate. So the worth of the house where I put in the assets, I would put as a third because I split it with my two other siblings. So then at that part of my net worth would be a third. I wouldn't put the whole
Correct.
worth of the house, right?
Yes.
Okay.
Yeah. And some people would be really strict and say you wouldn't even add that until you actually sold it, but I would say you can add that.
Ah, yeah.
But yeah, so I would add that. Like, I mean, I could literally sit down and go through my basketball cards, and you can, some people add every single thing that's worth something,
Right, I got some of those.
stick it in there, stick it in there. But yeah, you want to try to be conservative with whatever you're using. But that's something that, yeah, I would put in there as for your net worth.
Yeah, I got a rookie Barry Sanders card.
Ooh, I don't even know.
Barry Sanders, that's great. All right.
But I know it's worth some money though.
It's worth a little bit.
All right, so we're good on the net worth. Was there another one here? That's I could have swore I did this. Oh, it's in my, probably in my dreams list, maybe. Yes. So it's going to take you a little while to just fill these things out the first time, but then once you get in that, I mean, literally it takes 20, 30 minutes tops each week to, you go through, you do your budget, you take your money, put it in the different areas wherever it's got to go out of the different buckets, and that's it. I got to add this too. So this is something, so this is kind of going to you, Spirited. So the last thing is we talked about these goals, right? So the dreams turn into goals. So here's the ones that I'm working on, right? I organized them, I sorted them just so everyone knows why they're in this order. So I just went like this. I went to data, sort range, and I sorted them by accomplishment date. Okay, so I sorted them by the date that I want to get them done. So it's the same kind of thing as going through, see, sort, okay. So I'm going to Meow Wolf on October 4th, right? That's done. All right, so that's the first one. So now I have this Vegas one. Why is this here? That shouldn't be there.
Data sort range.
Yeah,
Did it go back? Wait.
sorry. Highlight by the numbers. Because originally what I did is I took my dreams list and I remember we sorted them by the
Yeah.
A's, right? So then I
Yes.
transferred them over to goals, and so it's just the A's are here. So now I have my accomplishment date, the finances that I needed, and my thoughts about them. I don't understand why September why this isn't sorting properly. Probably because I don't have this comment here. That's what I'm going to guess. So I'm going to go from here. I'm not going to count the first row, the column row. I'm going to just all my things. Oops, get rid of this. All right, let's try again. I'm going to highlight these. I'm going to go up here to data. Go down to sort range. And I'm going to sort it. I'm going to sort it by the accomplishment date. So that's column C.
Oh, okay, got it. I was like, wait a minute, how do you do that?
I
And
don't
just pick
understand
C.
why this one isn't moving. It's really annoying.
Gotcha.
I don't know why that's not moving. Another thing you can do too is you can just grab it and move it up there.
Put it in order so that you know.
Yeah, so it should be, I don't know.
Oh, 2026, 2027. Gotcha.
Well, you know why?
Maybe-
Probably because some
Maybe
of
delete
these,
it and put it in, type it back in. You might have some character in there that you can't see or
yeah,
something.
probably. I'm just gonna do it manually. You can just grab them, hold them, and move them. By the way, you can do that too. It's not that many. Cool. So now that I know what I need in what order, right? Okay, so like this is the first thing I want to hit, this Model Y, right? So I need $10,000, and it's going to cost me about $650 a month, right? So now I have a goals plan. Now, your first goal that I'm going to make everybody have as your first goal is to have 3 months of your current expenses saved. Whatever your current expenses are. Now you see I have 6 months of expenses saved down here at $33,000. But the reason why, because I'm taking into consideration this goal, this dream of mine, I'm already counting the house that I haven't bought yet, the car I haven't bought yet, right? So this number is further down because it's including these things I don't even have at this time, right? So I'm planning like all bad debt gone. Like the reason it's $455,000. I don't have that much bad debt right now, but that's because I want to be able to pay off this house that I don't own, right? So,
Okay.
Go ahead.
So I'm seeing here. So reconciling all of these different bills, right? Every week we would sit down or every pay period, or when we get our money, we take a look at it, we allocate the funds, we pay off the bills, whatever you got to do, etc. And then we're still mindful of our goals. It's something that we do every single week as well, like make sure we're on track.
Yeah, so your goals, So let's say, so like, look at a Spirited situation, right? Spirited situation is she's already, she doesn't have any of this debt, all right? So what she can do is she can go in this budget, and instead of doing a liability payoff, make this a goals. Or like
Now
I was
she-
saying a little earlier, I said maybe you want to have 4 buckets and have one of these be a goal bucket. And some of the money is going to go there too.
So it's kind of like that Millionaire Mind, T. Harv Eker, right? Like,
Mhm.
well, same thing, right? Like with the bitches man in
pendulum.
Babylon.
Yep.
Type of energy.
Yeah, so these things, so my personal thing is I want to get this 6 months back. I want to get this liability payoff back. But you could put goal money here too. Maybe you want to take 10, 20, maybe your goals, the goals that you have, maybe that Model Y, I really, really want this Tesla by next year. So I'm going to cut my no guilt money down to 20%. And I'm going to put 30% into my goals. Like these buckets, you can change your percentages based upon what you want to do. But then
We still keep the same percentages. I mean, we still keep money being allocated from, okay, I get it, but it's better to just pay off. And then, okay, I got you.
So that's what. So for Spirited, I would take out this liability payoff and just make this your goal money, right?
Okay, yeah.
Because you don't
So
have.
I should have just expenses, the no guilt money, the now 3 months of expenses and goals.
Right.
That's
So when
what
you get
month.
to, so now over here with the goals, this is part of your dreams list now. I just did this. You guys didn't see this last week, so I was doing this.
Yeah. Or is the
Um,
goals part of the 3 months expenses?
So when you guys look at this, it should be on here, but let me make sure. These templates there. Let's see. Maybe. Yeah, I don't have the goal plan here yet. Let me do that right now.
Can I take a little second for a break?
Yep. We're almost done, by the way. So, but go ahead.
We go to 5, right?
Yeah, take a break. I mean, I don't know. I haven't been chiming how long we've been going.
Yeah, we only have like what, 45 minutes?
I'm not timing,
Those
Maddie.
are the
Whoa, see, is an earthquake in Tennessee right now.
things. Let me copy this. Copy. And let me go back to this template. Actually, glad you didn't have Excel. It made me do it on here. It's much better to do it here.
Awesome.
Please.
I'm wondering why the template in the drive doesn't look like yours. I'm assuming it's because you just have more data in it.
Yeah, the template, I didn't put this goals and this goals plan. I just worked on this like this week.
Yeah, I mean, like, we'll go back to the main page where you have your budget and everything.
Yeah, 1 second.
Like the template doesn't have all of the total, the formulas on the bottom with the total. So am I missing something on that, or
Which one? Which template?
the money management?
So when you click this open like this, you don't see the tab?
Yes. So this doesn't look like the one that you're working on. So that's throwing me off. But I know like I would be adding my variables and that will be different, obviously. But the one that you were just working on has that big yellow bar at the bottom, which has all of the formulas in it, right?
This one?
Yeah, like that one.
Yeah, so this is one of the tabs under that.
Oh, that's one of the tabs that I wasn't looking
W.I.S.E
at.
money management. It's all the way at the end. But I'm going to separate all this up. I was just working all on one thing, so I'm gonna make debt snowball template, I'll make a net worth template, I'll make a budget template, I'll just separate them all into individual things. I was just working on tabs.
You can, I personally like them all together, but can't you just like if right click on the bottom where it says like net worth template,
Okay.
right click on it? Oh,
Yeah, it's not
there's a way
normal
that you can
Excel.
separate them. Yeah,
Yeah.
you can just pull it out of it.
Yeah, normally you can just pull it out, but I don't think it lets you do it in sheets. That's the problem. Like I could do it
What?
with Excel, but I don't know if I could do it in sheets.
Oh, okay. See, mine automatically converts to Excel when I
Yeah,
download it.
I'll make one that has them all on one, and I'll make each one individual too, so it won't be a big deal.
Yeah, that works. I just like them all together.
Yeah, I do too. That's why I had them that way. But I think when people are making copies of them, it makes it easier for them to make a copy and do their own into their own folder. So going back to the goals here. It's setting me the, all right, hold on. I'm in the wrong. I got too many of these things open now. Time to close the sheets. Close. I keep wanting to look into this solar coin. It's been on this for like 3 months now. All right, so where were we? We were on the goals plan. So the dreams list. So with your, so you have your dreams, you should have those A, B, and C, then you have your goals, you're gonna make those goals, and then you're gonna make a plan. The first plan should be, I don't know why these are yellow. It shouldn't be. Oh, yeah, there we go. Stupid thing. All right, let me do this for my example because it's a little bit better to do that one.
Oh, that's great. So the update as you update it. That's good.
What did I do? Oh yeah, that's what I was looking at my own personal one. All right, so this is the way it should look when you're finished. This is the mine. So you have your A's that you're working on. So you do your dreams, you get all those lists, and then you have your A's here. And you're going to turn those into goals. You're just going to copy and paste those into your goals. All right, and you're going to figure out when's my accomplishment date, when do I want to finish these things, and then how much finances do I need for each of these things. All right, and then this is in the wrong spot too. It should be. She's back. So you put these in order of accomplishment date, and then you have your finances that you need. So this allows you to make your plan, right? So now my plan, the first thing you should have here is 3 months of current expenses saved. So my current expenses times 3 comes out to $5,079. So I've eliminated almost all my expenses. I'm trying to be the janitor in the cash flow game. It's my goal. So there is low income, low expenses, right? So so there's the so that's the first thing you need to have. You want to get that as your first goal. So then I have health insurance and I have Model Y and I have all these things, right? So so now you can have, so when you have your goal money, it goes into here, and so if you save $600 into there, now you just know where that is.
This
and
is,
go ahead.
Proceed, please.
Receipt?
Proceed.
Oh, proceed. So That's it. That's all there is. That's all I have to do for you. I'm working on breaking it down somehow into how many months it is, but it's not like a snowball effect type of thing. This is just, it's just a way to track how close you are. And then when you actually, because then when you get here, when you come on here one day and it's at like 990, oh, it's like, oh, I gotta get my Tesla. All right. So it makes you say, oh, okay, it's time. I got enough gold. I got enough money in my goal thing here that I should.
How are you storing that? Like, how are you storing the money for your goals? Where are you storing it? Are you doing what, like, are you putting it in the money market?
That's
like,
in the savings.
That's for just for the saving. That's where the 6 months would go.
Right. Because let's say I have an emergency. The emergency money comes from my savings account, not from my investment accounts. Because most people, what happens when they have an emergency, they immediately go to their invest. It's like, oh, let me sell some stock, because that's not as important. And it's actually the other way around. The whole reason you're supposed to have savings is for those emergencies. And if I have to cut back on getting my Model Y, that's I'd rather take an extra 5 months to get my Model Y than take 5 months out of my investing money. Because my investing money eventually is going to continue to add more to get me to these goals faster. Because my investment money is making me more money. Even if you're just if you're using it for in stocks, or if you're using it in dividends, or eventually if you're going to put it in a home or a retail expense. So it's like, okay, that investment money doesn't exist anymore. The only thing, only stuff that comes out of my investing money is my investment babies, my revenue from my investment money.
Copy.
Everyone else good with that?
That's
Yes,
fine.
sir.
Yeah.
You're way cooler than I thought you were, Maddie.
What do you mean?
Pretty cool.
Oh.
Cool cat.
Then you got your achieve things here. Once you start achieving them, I want to start sticking them on here so we can talk about when you achieved them, the date you achieved it.
Did you just add that?
I did, but it's in the I think this is probably the final form now.
Not in my copy though, right? So I have to make another
No, it's not in
copy.
the copy. Correct. It's just copy and paste. Shouldn't take it very long.
Touche. You're right. I was thinking negatively or lazily, both.
Yeah, you can just go here, click this in the corner, and you can copy the whole page.
And just add the additional tab. I have a recommendation since you have all of these, like, a suggestion, I should say.
Good.
So you know how like each class like snowballs or builds or avalanches on each other as well. I think so like for the second one, if you now that you have the goal breakdown along with the dream worksheet, if you were able to give us both of those, and then maybe, am I making sense here?
You will. I mean, it's all going to be there now. I was just working on this as this class is gone.
No, I know. I like it. I was saying like, if I were to go back and like, you know how we did it and then we had to like separate. Now you already have that. If we were to get, let me shut up.
Okay.
I like it.
I'm not.
No.
I'm listening to you.
I'm following. Give me.
Like if you're piecemealing it to us, because remember, like, let's say we do the 100 goals or whatever, and then you're like, oh, go home and I'll say A and B, and then you go home and say A and B, and then, you know, maybe like the 15 minutes before when we're piling in or whatever, now you're just, fuck it, I forgot where we are. Just ignore me, Maddie. I think my attention span is like a goldfish.
All right, we're getting to the end of the class, so got it.
Yeah.
I know you well.
I'll
just let you talk yourself out.
It's all good. The Dallas Cowboys game just started.
Yeah. So
Like, what?
All
Well, my
right,
team won.
so then you have your goals, and then eventually you can have like a month thing, but I'll figure something out for that. All right, so this is basically, you know, I see some of you guys are already starting to work on this. Let me know if you have helped. How do we feel comfortable with this stuff? I mean, does it all make sense? Everything that's in here?
Yes. Yes.
Absolutely.
Well, that's why I was so confused.
In theory. So we'll see once I start trying to do stuff and then.
Yep.
No, I like it a lot. I wish even if you could incorporate those, like, I don't care.
I'm gonna incorporate everything you're saying. All right, cool.
I just feel like
So,
the concepts are getting more solid for me to get out of that regular mindset. Like I'm definitely going to get some credit cards and get rid of my ATM cards. And I'm getting the grasp of the assets as opposed to liability things. So the further we go along, definitely it's becoming more solid in my mind. So that's good. We're going in the right direction.
that's the goal. All right, so next class is the last class, and
It is.
we'll talk about the stock market.
Okie dokie.
We'll dive into that stuff next week. So
Yeah.
I'm gonna have
So where do
all
we
of
bother
this-
you if we need?
you know how to find them.
Yes,
Oh yeah.
I am on it.
Ignore me. I
have all
think my
the-
attention is. I can't
Yeah.
find this drive anymore.
I can
Unless
resend it to you.
no, don't resend anything to me.
All right. Bill, were you gonna
Have
say
it.
something?
I'm just gonna go back to the email. I think I just encountered what you guys were talking about before in the beginning of class, where you're like, how do you access the drive? And I'm like, I just go back to the original email, which is what I'm gonna do.
All right.
Okay, there you go, never mind.
All right. I think we're good for today.
What?
Thank you for
You
the
let me go
time.
to take a bathroom break and we were just about to end?
I told you we were about to end. I did say that, like right when you said we're gonna end it, we're gonna wrap up. So, I think the main thing is to get your budgets in there. I think some of you have already started working on that, and then it's just when you get paid, go take out your thing and put the money in there and see how it works for you. But eventually the goal is, if you continue to do this, you can see if you would do this for a year, how different your financial place would be.
I don't see this,
Yeah.
I don't see this new.
I wish I had done this last
spreadsheet.
year though.
Oh, which sheet are you missing? Can't you find?
I'm confused as fuck. I can't. Okay, so I'm in the folder.
Right.
Where is the extra page, the last one, where you're adding the goals,
Should
the
be the dream
accomplishment?
worksheet. The dream list worksheet.
Oh, you added another tab.
Yes, I did.
Holy
Should say
crap.
goals and then goals plan and then achieve.
Copy. All right.
So you can just literally copy this goals plan page and put it in your other one if you want to.
Yeah, I thank you, Maddie. Thank you for clarifying that for me. I appreciate that. And this was very insightful. I think I agree with Spirited when she was saying about like, oh, the picture is clearer and the concept's more solid, and just I like that. Only thing that's it.
Well, I mean, look, this is, if you follow this whole thing, your credit rating's gonna go up. You're gonna get yourself out of credit card debt if you have any, and then eventually your assets will start adding more and more income. And you talk about the whole delayed gratification, like you're gonna have more money in your no guilt fund because you'll be making more money out of your assets into putting it into, and as you lower your liabilities, you're gonna have more money. And the goal is to grow that decision money as big as possible, because the more that gets bigger, the more everything else gets bigger.
All right.
All right. Keep a heads up. I'm gonna Bill and Spirited, I'm gonna send you the link for public.
Oh, absolutely.
Yes.
Sign up for that. Actually, you know what? Wait a second. Hold on. One last thing. I think it's on the website already.
Did anybody hear that sound?
Yeah, it was cricket.
Vimini Cricket.
Oh, I don't have the, oh, I have the link right here.
333.
There you go. So if you guys go on your phone and go to the ilovemaddiewash.com, and the link is right there. I'll make it a button, but the link is right there for now.
It's on the
On the
homepage.
homepage. Yep, homepage, free stocks in public. It's like the first one down there.
Okay.
And then
Do
I'm
you-
gonna be, I already have the next week's class done, so I'm just gonna be working on my website for the rest of this week. So you'll see some stuff coming up.
It has you as an
Yeah.
investor.
Look at this, Christelle. I know I made all this today. Ooh,
This is from the, wait, this is not ilovemaddiewash.com.
it
But
is.
yes, it is.
Yes, it is.
I'm on your website right now.
I know. I just started making. I just set up
Just
my
now?
acceptance. I just did this today, like 15 minutes before the class started.
Mm,
Oh, I'm digging it. Is it gonna be on Teachable or something?
I don't know. Let me get it. I'm not down that road yet. I'm not into the marketing aspect of it yet. I'm just putting it together still.
That's not the marketing aspect, that's the putting it together part.
This
But
is
it's okay.
putting it together.
yes.
Okay,
I'll
so
make my video class. I don't know. I might use no. I don't know if I'm gonna use Kajabi because I'm gonna deal with.
check out Teachable, Maddie.
I will.
My like it.
All right, I'll take a look. Thank you.
Wise video. Wise video. It's so good. Wise video introduction to investing course. I like it. Venmo, PayPal, pay later. Ooh, I'll pay later.
I don't know what pay later is. How's that?
It says pay
Yes,
later.
and after the course is over, so the next class is our last class, right?
Yes.
Classes.
Yep.
And so, yeah, definitely want to talk to you about your marketing and everything and see if you still need some help. I'm here for you.
Definitely.
So I'm actually getting ready to start working with a new marketing consulting company to I was going to be starting my own, but I've decided to kind of put that off for now. But I will be working